What's up, everybody? Dave Bartosiak here, and I've got another chart of the day for you. This time, we're talking about CVS Health, ticker CVS. Now, big picture, this is a stock that's done very well in the past, and you could put this in the same camp as Walgreens, right? Um, I'm not dating myself. I feel like I'm just a normal, 40-something dude when I talk about, the drugstore wars that there used to be, the Rite Aids versus CVS's versus the Walgreens, and CVS would open up or Walgreens would open up right across the street, and the stuff kind of happened. And this was all throughout the 20 teens. And then little by little, they started getting their lunch eaten. And it was, things like Amazon Health or Amazon coming in and selling types of products you can get there, amongst other things, subscription services, all types of stuff, which has really put the stock under pressure. So, this is a stock used to be 112, made a run back up to those highs, those 2015 highs, in that post-COVID ramp up that we had. But since then, things have not been so good over here at CVS. So they were in the news recently because they were talking about a potential breakup of the company. You got several arms of CVS, and they're exploring ways that they might be able to cut this thing up. Most recent really nasty gap down here in May. And you can see this. Stock waking up. You were, the night before, you were in the high 60s, and then all of a sudden you're in the low 50s, right? These happen all the time after these earnings reports as, money flows out. Now, were there signs? So let's take a look at this 200-day moving average, and we can sort of see some of these signs. We can see failures, a little rally above, and it comes down below. A little rally above, and we come down below several times. This is why I really love the 200-day, because it's probably the strongest sort of long-term indication of where investors' heads are at regarding a stock. So lots of time beneath that 200-day, finally fights its way up, but sort of just stalls out, runs out of steam, and then here we go on lower again. Now, over the last few days, we have had a bit of a rally, like I said, on some of that news, but here we are just a few days later and already downside pressure yet again. Have not filled that gap. The gaps love to get filled. That gap down just hasn't been filled, with the bottom end of that gap specifically being 66.94, which is right about where that 200-day is right now. 200 days at 66.23. Now, it looked like we're going to try to creep up there. Got a big down candle today. A good chunk of this is just negativity in the broad market with what you're seeing in the Israel and Lebanon conflict. So the market's under a little bit of pressure. But overall, same scenario. It's bouncing around that 50 with the 200 creating a ton of negative pressure overhead. Attracting it so it can reject it, but it doesn't even look like it's going to get there because we already got a big negative here today. So why am I pointing all this out? Well, when you're in a stock and you see it roll over and it really fails to get over that 200-day, and you got a lot of negative news, and you got their competitors have negative news, it's not just the A versus B situation. This is a situation where there's a major shift in the marketplace. Make sure you're taking a look at earnings and stuff like that. So like right now, CVS is exact rank number 4 sell. And the reason for that is that these earnings estimate revisions have been coming into the downside. So you see that from analysts, then you see this sort of thing happening in the stock price. It's just a warning sign of things to come. Now, could this be a value play down here? You really have to get into the nitty gritty of what's happening in terms of where they could potentially break up and where that money could be. But what I'm seeing just from a technical perspective, again, you have a negatively sloped 200-day, lots of selling pressure there. Seems to just kind of meander around that 50-day. So I'm honestly looking for more downside versus upside in this name. If I am a value investor and I'm looking for something, I'm waiting for a break of the 200-day on a decent amount of volume. So you got this break of the 200-day, but if you look here, not a lot of volume there, right? Basically the same. When you got the big volume was sort of at the end of the run. And then it came down, ran out of steam, bounced a little bit, trying to get through, And then when it had that next failure, then you're out. So you can kind of play this by, you wait for a breakout over that 200, you can enter, and then just have a stop down under that 200 with a little bit of space, because you get these stop grabber days that happen sometimes. So that's a safer way that you could play a value stock like this if things start to turn around. All right, folks, that's all I have for you in today's chart of the day. I'll be back tomorrow with another one, so be sure to follow the author here on Zacks.com. There's a button here somewhere, probably over there. Be sure to subscribe to the YouTube channel so you can check out all of the videos that we have posted. We do several each day, and come back tomorrow. So for me and everybody else here at Zacks, I want to say thank you, and we will see you again.